Some investors love holding physical assets like gold or silver. They can be a great part of your overall portfolio, but are they worth it? Fasten your seatbelts, folks. This is going to be a good one. Physical assets, particularly in the context of gold and silver, refer to tangible items or, of course, commodities that have intrinsic value and can be held in, well, a physical form. Unlike those paper assets or digital representations of such, physical assets like gold bars, coins, or even silver bullion exist in a material form. For centuries, gold and silver have been recognized for their value and have served as standards for wealth and monetary exchange. Physical assets can also include real estate, but for the context of this video, we are mostly looking at rare earth metals such as gold and, of course, silver. Needless to say, there are both pros and cons to holding physical assets. Let's look at the pros first. There are several pros to holding those physical bars of gold and silver. First, they act as a hedge against inflation as well as currency fluctuations. This allows them to preserve purchasing power over time. Gold and silver are universally recognized and can be liquidated in virtually any part of the world, ensuring their acceptability as a form of wealth. Also, having these assets in a tangible form reduces the risk of default or counterparty risk that may come with financial or digital assets. Lastly, the tangible nature of holding on to the bars yourself gives many investors a sense of security and control, knowing they hold real value in their hands. Some investors simply love holding their gold. However, holding these physical assets do come with some cons. Storing them securely can be challenging and may involve additional costs, like, well, for safes or maybe security deposit boxes. Another con is that they don't generate any form of passive income, such as dividends or interest like some other investments may. Physical bars can be cumbersome, making transportation and transfer a wee bit challenging, especially in larger quantities. Additionally, while they act as a hedge against inflation, their prices can still be volatile in the short term. These prices can be influenced, well, by global economic factors, speculation, and of course supply-demand dynamics. Finally, selling physical assets may entail assay processes to verify authenticity, which can incur fees and of course delay liquidity. With that all being said, how do you get into the physical asset game? Join the conversation. Let us know in the comments if you are holding any physical treasure. Your participation is well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a huge thank you for that click. In Canada, buying gold and silver can be approached in several ways. Traditional methods include purchasing physical bullion, coins, or bars from reputable precious metal dealers, mints, or even some banks. When making a physical purchase, it's absolutely vital to ensure the authenticity of the metal, so buying from well-established dealers with positive reviews and transparent pricing is always advisable. So let's take a look at some of the places you may want to buy some physical assets from. We will start with, well, the obvious, the Royal Canadian Mint. The Royal Canadian Mint has gold and silver available in coins, bullions, and bars. In addition to that, they also have a non-physical product in the form of an exchange-traded receipt, or ETR. An ETR trades on the market just like an ETF, but it is backed by physical gold or silver that the Mint holds, so you do not have to worry about all those storage costs. For gold, they have MNT or MNT.U if you want it hedged to the US dollar. For silver, they have MNS or MNSU, once again, for that American hedge. When we look at the 3-year return, physical gold was down negative 2.69%, while MNT was down much more at negative 15.74%. On the 1 year, physical gold was up 8.58%, while this ETR was up 7.67%. They do seem to have a correlation, which is the idea. But at first glance, I'm a wee bit concerned over the ETR dropping much more than physical gold. However, when you do look at the rebound on the rise towards their 1 year, the ETR had a lot more ground to cover, and thus, when gold regained 11.27%, the ETR actually rebounded 22.61%. So in the end, I do believe it works out for both of these options. Another option that has been in the news lately is Costco, as they are selling their 1 ounce bars of gold for $2,679.99 each, with gold currently being priced at $2,507.24. That is a markup of about 6.5%. Mind you, in a few years, you should hopefully have made that back, or of course more. These Costco gold bars are limited to 1 buy every 7 days and 2 maximum per membership. Also, if you live in Manitoba, they are not allowed to ship them to you. Why? I do not know. The third vendor I am going to feature is Border Gold. They have gold, silver, and they also have platinum and palladium. Interestingly, a 1-ounce gold bar here is a wee bit more expensive than Costco, coming in at $2,570.95. Keep in mind, these are the prices at the time of recording, and they may be different from day to day. If you do have some deep pockets, you can buy a 1 kilogram bar of gold there for $81,996.92. They do have silver bars, of course. A 1-ounce silver bar is super affordable at $35.03, and they do come in, of course, larger sizes, such as the 5-ounce bar at $173.42. Now, moving outside of silver and gold, a 1-ounce bar of platinum comes in at $1,304.80, and the same with palladium, which comes in at $1,814.73. Storing physical gold and silver bars securely is super important to protect your investment. Here are some of the best storage options. Firstly, your good old safety deposit boxes are a great way to keep your precious metals safe. Most banks do offer them, and needless to say, they come with a very good amount of security. Not a lot of people are successful at robbing banks, let me tell you. There are also private vaults that are available from various companies that can be utilized. The Royal Canadian Mint, for example, does have storage options. If you like to keep your shiny bars at home, there is always the option of a home vault. If you do go this route, it is really important to make sure that it is of good enough quality to be rated as fire and burglar resistant. Regardless of the storage method you opt for, regular audits, clear documentation, and a periodic access or checks on your treasure are essential to ensure peace of mind and the safety of your investment. No matter which option you use, it also makes a lot of sense to make sure you have some insurance on your pot of gold. We have looked at a lot of information on physical assets, but we never really answered if you should make physical assets a part of your portfolio. There is absolutely nothing wrong with including physical assets in your portfolio, and in a way, it does add a different sort of layer of diversification. If you do not hold any physical assets, that's okay too. It is not very likely that something could happen that would result in you losing access to your assets. If, for example, your broker was hacked, there is insurance for that. So for most things, you have really not a lot to worry about. Now, there are events that potentially could happen which may make you wish you had physical assets. In all likelihood, even in an apocalyptic scenario, a gold bar is not really going to help you much. If people cannot access their assets, I highly doubt you're about to trade away a bar of gold for a loaf of bread, even if it is banana bread. Now that, my friends, that's a different type of gold for sure. Keep the learning going. Watch my video on Dollarama, linked on the left, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in, the next video.